I'm taking a look at Tesla because it is a tell oftentimes. Coming back to basically even on the year is Tesla, back to a $674 billion market value. Of course, shareholders in GE would love to get anywhere near a number like that as the stock is down 4%. But it is a focus this morning after announcing this large transaction to combine its aircraft leasing business, which is called Gecas, with Irish company AerCap. The proceeds that we're talking about, well, roughly $30 billion, $24 billion in cash, and then a 46% ownership stake in the combined company. Obviously, it's going to be a while till it closes. But in speaking to Chairman and CEO Larry Culp earlier this morning, he kept talking about a path to a well-capitalized company. And I did ask him, well, how far along are you now after this transaction on that path?
The beauty of the transaction is those cash proceeds will allow us to pay down debt. And when we get to closing, we will, in fact, have reduced our debt over the last several years here at GE by over $70 billion. Job one has been deleveraging. We're going to be well on our way toward that well-capitalized position that we aim to. With respect to the equity, we would never sell this company at this point in the aviation cycle, but by owning nearly half of the company, we get to ride the business going forward. But there will be a time where we exit the position.
This is a company whose history prior to your taking over was certainly not the best when it came to both buying assets and divesting them, at least at the proper prices. So when we go back to this transaction and look at what you're getting in terms of the consideration, how you're valuing the overall business here, why should your shareholders feel like you're getting a good deal?
Well, I think a GE shareholder should be delighted with this transaction. With a $30 billion headline, what we're able to do here is bring cash in, again, 24 of cash, $1 billion of additional consideration, which will allow us to put that toward additional debt reduction. And at the same time, we get an equity stake in nearly half of the combined company. Again, so we're not selling today. What we're really doing is merging these companies, investing, if you will, in a stronger aviation leasing platform. Over time, we'll monetize that equity stake, but we wouldn't have done that today. But this gives us an opportunity to invest in a stronger platform and over time realize those proceeds. But again, I think the real story for the GE shareholder is less about the transaction today and what it triggers for us to be that simpler, stronger GE going forward.
There are those who would still say, I look at aviation and I look at healthcare, and they don't necessarily seem to me to be great synergies between the two, that there may still be more that Mr. Culp can do to pare down this portfolio. Are you done, Larry?
David, as you know, I'm a lifelong student of the Japanese concept of Kaizen, continuous improvement. And when you have that mindset, you're never done. But I think today is really about putting our Gecas business in a position to succeed in a way that serves all GE shareholders. We get to pivot toward that transformation with a more focused, a simpler GE in mind. And over time, we're going to be focused on continuing to improve the performance of our underlying businesses. And as we do that, we will, of course, generate more strategic optionality. But I think today is really a focus on the businesses. And I'm excited to have a chance for everyone to see the CEOs up close, see what they're doing with their businesses and where they're headed.
A lot of those CEOs will be presenting right now, actually, Leslie, as they continue to have their investor day. Whether it's gas power, the power portfolio, renewable energy, aviation services, healthcare, and on from there. But GE Capital not going to be as much of a concern, at least in the hopes and the actions given that have been taken by Mr. Culp.
I wonder if you start to see additional companies trying to pare back their debt load in the face of potential rising rates. This is really the first big example that we've seen of deal making happening around, that theme of reducing debt. Obviously, GE has been on that path, as he mentioned, for a while now. It's just looking back in 2017. I mean, it's like $130 billion worth of debt. Now down to 75, presumably closer to 50 after this deal is done. But I wonder if you do start to see those conversations start happening as debt becomes less cheap. Do we try and, commence some type of transaction that could help us reduce that debt load, while we still can? Or is it that corporate America believes that this is just a temporary blip in yields moving higher and it's not really worth doing a transaction right now? I don't know what that answer is, but this deal kind of made me think of how that's changing.
It's an interesting point.
Mindset.
Obviously, floating versus fixed becomes important for those who are considering the balance sheet as well and what they've got out there. And again, we haven't had that big a move. I mean, historically, we're still at extraordinarily cheap money, Carl. But for GE, they had some unique pressures, as you well know, on them, given both realized and perhaps liabilities that had not yet been fully realized until the last few years.
Shepard Smith here. Thanks for watching CNBC on YouTube.